Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to follow up on a question that we had in our private coaching call last night, which I think is a really good one. And I want to shatter a myth that I think a lot of traders have, and that is the illusion that profitable traders, winning traders, like they buy here and it goes here and it's like a straight line. You get in a trade here and there's no problem. You just get in and it goes whoop, straight up to where you make money. That is so far from reality, it's ridiculous. For some reason, people think that everybody else have the easiest trades on the planet, and you just get in and boop, it goes right to where you expect it to go, and there's no stress in between. So what we want to do is first, I'm going to read the questions. It's a question from Maureen that was followed up by Andrew. And I have to get a little closer because I don't have the best vision. For stop loss and trailing stops, when is the right time to adjust your stop loss? So basically what we're saying is you have your stop loss here and then the position starts to move in your favor. At what point do you move it from a stop loss, which is your original entry stop loss, up to maybe a break-even stop loss, and then maybe even up to a trailing stop loss as it moves in your favor? So for example, you enter a trade at $25 with a stop loss at 23, so 25 and 23. And your target is 31. So your entry price, your stop loss, and the target. So Maureen did a great job of outlining the position. Do you adjust your stop loss as soon as the stock goes up or wait until it hits your first target? That's a pretty interesting question. Now, here's really the biggest part of it. Does the concept apply for both swing trading and day trading? Here's the monster part that's kind of underlying this question. Swing trading and day trading are completely different businesses. Completely different businesses. Swing trading, you can give the stock a little bit more room to breathe. There's 6.5 hours worth of trading between one day to the next. Day trading is a different business. Write that down. Day trading is a completely different business from swing trading. And the way I explain it all the time, I grew up playing baseball. I love baseball. I was a catcher. The difference, but I hated softball. Absolutely hated playing softball because when I was catching, it was so fast and you had to, every single play mattered. Softball's like you can have a beer, you're out there relaxing, you're hanging out with your friends who are in your neighborhood. Completely different game, okay? With day trading specifically, most of the profitable day traders that I've known, they know exactly what that trade should look like. They know exactly where they're going to be booking profits. But for some reason, newer traders come into the business where they don't really have a profit target on a day trade. They just know that they want to get into the trade and they're not really sure what the target is. So what we've done in the boot camp is we've given a very specific number, very specific level that is different to every single stock, but definite to every single stock. And what I mean by that is it's a number based on what the stock normally does. I don't want to give it away because it's part of being in the boot camp, but it's the first level of the ultimate of where the stock could go, but not necessarily the only place it could go. It could obviously go much further, but it's a target. It's the first target as a day trade. But here's what a lot of people misunderstand or misuse with the day trading target. And I'm just going to expand on that just a little bit because the target is the first level. And then when the target gets hit, we don't just automatically get out at that level. What happens is it's kind of like an alarm. Boom, it hit the target of what the stock normally does. Now is when you start to, as Maureen had asked about adjusting your trailing stop, how far up do you adjust your trailing stop, that kind of thing. But that's the ultimate target. That's not the only target. You know, this was kind of spurred from a conversation where somebody had mentioned that they got out of a trade too quickly. And I said, why? Meaning, why do you feel that way? Not why did you get out too quickly? Why do you feel that way? You know, if you're risking a quarter and you make $2, that's a pretty darn good risk reward. I think I'd sign up for that for the rest of my life, quite honestly. If you're risking a quarter and you make $2, that's a big return on that investment. So whether it's the ultimate profit target or 3-to-1 or 4-to-1 or 5-to-1, which by the way, 3-to-1, 4-to-1, 5-to-1 intraday absolutely happens, but that's not day trading really. It's day trading is about you putting on a trade, you're making cash flow. You're putting on a trade, you're making cash flow. So you kind of have these mentally two different businesses that you're running, which is a day trading business that you're paying the bills and you see your account growing up cash flow wise, the swing trading is where the wealth it happens, because you're getting in, maybe November 1st and getting out November 21st. I'm just using random dates. Very big difference between the two. And it's easier, quite honestly, to have your profit targets on those swing trades, because it's easier to look back to the left and say, okay, on the daily charts, that's kind of what this stock normally does, or that's the obvious resistance level. So I want to do some simple math just to like really kind of like drill this point home, so you relax a little bit and don't beat yourself up over managing winning trades. So if we use a win-loss percentage, I know everybody gets so enamored with 90% win-loss percentage. You don't need a 90% win-loss percentage to be massively successful. What you need is a higher return on your winning trades and relative to the smaller ones. So basically, I'm talking about risk reward. So if we use a 60% win percentage, which by no stretch of the imagination is that amazingly hard to do. Okay, it's very, very possible, especially if you have the same edge that we use. And if we use a 3-to-1 risk reward. So as a day trader, let's say you're risking 50 cents and you're looking to make $1.50. Very, very realistic in what we do. And let's say you agree to that and you are 100% comfortable with that. Yeah, 3-to-1, sign me up, 60%, right? So if you make 6 trades that make $300, I'm just keeping the math really, really simple. 6 trades that make $300, 4 trades that lose $100. So that's 3-to-1 and a 60% win-loss ratio. So you'd have $1,800, 6 trades times 300, $1,800 on the profitable side. Then you would have $400 on the trades that didn't work out. So that means a 60% win-loss percentage and a 3-to-1 risk reward gives you $1,400 for every 10 trades. Think about that. Let that sink in for a second. You're not stressing out now about every trade needs to make the maximum amount. Every trade doesn't need to go from you bought it at 52 and it has to go to 62 that particular day. So if you think about, especially as a day trader, where you can make 10 trades in the morning if you're an active day trader, or 10 trades throughout the day, let's say you're not a super active trader, you really need to have a profit target. You need to have some sort of minimum target where it will justify accepting the risk. That's a big part of what we do in the boot camp. Is if you're putting on a trade and you say, okay, well, I like this entry or I like this idea, you have to build the argument. That's a big part of the boot camp, building the argument of why you expect the profit target to be hit versus your stop loss. So I'm giving you basically, we have the ultimate of where it could possibly go, but then you also have the in between, which is, okay, if I'm risking 50 and I can make $1.50, I'm good with that all day, every day. Now, the problem comes in is when you put on a trade and you want to make more on the trade, which 100%, absolutely, who doesn't want to make more, right? But here's the thing. When I first started trading, we were scalpers. We were doing what was known as scalping teenies back in the day. Everything was in fractions. You'd buy it $50, you'd sell it at 50 and 1/16. That was the business all day long. You didn't care about where it went after that. You just put the trade on and did it again. You bought it on the bid, sold it on the offer, bought it on the bid, sold it on the offer. You did that all day long. And at the end of the day, you probably had 100 trades. 50 of them probably broke even, where you got in and out at the same exact price. In trading language, that means it's a flat. And the other 50 where some were losses, some were small profits, but you knew exactly what the profit target was supposed to be. You knew exactly where you were getting out. So that's why it was easier to run the business. It was easier to be a day trader. There was really no, where's it going? It was like, that's the exact strategy. We were trading off a level 2 box, and that was what we were doing. Now, as a trader, as a day trader, especially if you're looking off of charts, and let's just use a 5-minute chart as an example, what does the trade need to look like for you to say, that's exactly where I'm getting out and where you're going to do it again? That's what active day trading is. Now, there's this other vision that a lot of people have of trading where they're going to buy here and it's going to have that straight line that just goes way up to the top, right? And of course, we'd like that to happen. Of course, that does happen, quite honestly. I mean, we've been trading some stocks. If you're in the right stocks and pick those stocks on the right day and learn to read the market internals and sector rotation and how the market's trading all day, those are the days when you can see that happen and the follow through happens. However, here's the big thing that it's more of a mental thing. If you want the bigger profits, And this can be a little challenging as a day trader because you're sitting in front of your screen, you're watching every uptick and downtick, and your heart's going up and down with every uptick and downtick. You have to be okay with drawdowns on winning trades. There's no other way to put it. And here's a different way of looking at it, because I like to play these mental games with myself in order to get to the next level of where I could be or want to be. If you put on 10 trades, again, we'll just keep using 10 because I love the idea of 10 perfect trades. It's easy to wrap your head around. It's not a way out there number, right? If I told you right now, you're going to place 10 trades, and at the end of those 10 trades, you're going to make $10,000, which is absolutely possible. We're doing it in the boot camp. We're doing it. It's happening. But here's the interesting part. If I told you during those 10 trades, 2 of those trades were going to make all of the $10,000, and 5 of those trades you're going to be up $4,000, and those trades are going to come all the way back to zero. What would you say? Well, I would tell you what most traders would say. They'd be complaining and whining and going back and forth about, but I had 4,000, it came back to zero. But you're mixing trading strategy. You're mixing the objective. If your goal is to have a target entry here and a target up here, you have to be okay with the fluctuations back and forth if that's your strategy. That's a very hard strategy because a lot of people don't have it. It's hard to wrap their head around where I'm just going to get in, I'm going to let it fluctuate and do whatever it's going to do, and have it move all the way up to that target. So this kind of gets back to Maureen and Andrew's question about where do you manage the stop loss? And Andrew is specifically saying getting out of winning trades too soon. Getting out of winning trades too soon means that you're mixing or not 100% clear on what that target needs to be, because you're managing the trade after the fact and seeing where it went after the fact, as opposed to managing the trade while you're in it and saying, I'm okay with these fluctuations and drawdowns, which are expected, in exchange for ultimately hitting my big profit target. Larry Williams is very big on this, where he basically has a trade that's called hold to the close. And he says, look, you have to be okay with all the wiggles and jiggles and everything that goes back and forth, because that's not the objective of the trade. So newer traders in the boot camp, I'm generally teaching them, here's the one level that we're looking for everything. And then there's trade management in between. There's booking into the next wave of buying and selling it when people are interested in buying it. You know, we have all these different parameters of well bid and momentum and all that kind of stuff. So really, when to move your trailing stop loss, how to hold your trades longer, really comes down to what is your trade objective? What is your business plan? What is your trading plan? And you need to know that before you start the day. And it's easy to look back on any particular day and say, oh my gosh, that stock just kept going and going and going and going. And that's great. But was that your objective going into the day? Were you trying to make $500 5 times during the day, or were you trying to make $2,500 on one trade? The $2,500 on one trade is going to force you to have a business plan or a trading plan where you're allowing all these fluctuations and drawdowns and a lot of trades that go up and come all the way back down in exchange for the 2 trades that keep going. So stop beating yourself up over trades that move after you get out of them, because that might not have been your business plan. Myself, which as a pure day trader, I just noticed my collar. As a pure day trader, I don't care if the objective is $5, just for argument's sake. Most traders are not buying at 1 and selling at 5. That's not reality. They're not buying at 0. They're not buying at 0 and selling at 5. Most active day traders are buying at 0 and selling at 1.5. Buying at 1 1/4 and then selling it at 250. That's active. That's real active trading. If you are a intraday position trader, you're going to have bigger wins, but you're also going to have drawdowns where profitable trades come back, and you have to mentally be strong enough to say that $4,000 I had on the table disappeared in exchange for the one trade that moves $10,000. It's kind of intraday trend trading, but you need to know which of those strategies you're applying. It's very important. And it's also why swing traders make more money, because they allow, I want to take that back. Swing traders have the potential to make more money because there's more time in the trade, and they're not letting it fluctuate through all of those periods of time. So it's really simple math. It's simple math and clear objectives about what kind of business you're in. So be nice to yourself. If you exit a trade and it keeps going after that, ask yourself, what was your objective prior to the trade? And that's going to help you determine how you're going to manage the trade. And it's also going to allow you to be nicer to yourself because you know your objective. One of the best traders I know, his name is Mark. that made millions, it still does, makes millions and millions and millions of dollars every year as a trader. His objective is to keep adding to positions. He's not looking for the first wave. He's looking for the next big wave. He's looking for the next big move. Sometimes it's one day. Most of the time it's over 3 or 4 days, but he's constantly doing what we call working in order, trading around a core position, looking for the next move. He's taking small profits, taking and adding and subtracting. And ultimately, if he ends up getting that 2 or 3 day run, he's still working around that position. But he knew exactly how he was trading. He wasn't looking for the next blip. He wasn't scalping teenies. That was his strategy. Now, I personally believe in what I teach in the boot camp is I first want to teach you how to earn while you learn, which is let's get involved in really good entries and look for the next move. Let's look for the next move. Let's look for the next move. And you start to get paid and you start to get confidence and you start to feel really good. You start to feel like you know what you're doing. Then we have conversations about possibly expanding the time frame if you want to. Not everybody wants to. Some people like ringing the register. But those are the deep conversations that we need to have, like we had last night in the coaching call. So just throwing it out there for you to have some internal weekend dialogue when you sit down, like I do every weekend, with a legal pad, and you're like, okay, what do I want to improve this week? What can I do better? What do I need to work on? What did I do right that maybe we can amplify a little bit? And generally speaking, when you learn how to not lose money, the next stage is how do I make more? And that's really adjusting your trading plan to either trade bigger share size for smaller moves or learn how to work orders in the direction of bigger moves, being okay with those drawdowns. The toughest part of everything I just explained is mentally being okay with the drawdowns in exchange for that bigger move. It's not easy. It's not easy, but on the other side of that is some bigger wins. But you have to be mentally okay with those drawdowns. So if you have any questions, absolutely leave a message below the video. I'd love to hear from you. If you'd like to get coaching like this in real time every single day, definitely find out about the boot camp, click down and learn about that, and subscribe to the channel. That would be awesome. Have a great day, everyone.